Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Neil O'Donnell and Mehak Rashid on the line, and they're managing partners over at Legal Scale. And I'm glad to say that they're return guests that we brought back for our Global Leaders series. Neil, Mehak, welcome back to the show. Good to have you back on.
Happy to be back. Thank you so much,
Yeah,
Adam.
it's great to
Appreciate
be
it.
here. Thank you.
All right. So we got a lot to talk about today. I think it's been, correct me if I'm off, I think we're going on maybe a year since the last time you've been on. Is that about right? Something
I
like
think that's
that.
right. Maybe 18 months. Yeah, we're a lot of growth in the interim, and it's been awesome.
Yeah, I need some updates. We're going to talk about Legal Scale. We're going to get into, of course, what's been going on the fund side of things and fundraising. So we'll get into that from your perspective. But before we do, we'll start this episode the way that we start them all, with what we like to call our Mission Matters Minute. So at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, for executives, for experts. That's what we do. Neil, Mehak, what missions matter to you?
So I think our mission first and foremost is to make sure that all of our clients are doing great deals and ones that are accretive and supportive of their platform. Mehak and I work on a great variety of businesses, from Internet of Things companies to e-commerce to SaaS and to AI businesses. What's most exciting for us is to be able to lean in, and for us and for our team of very senior attorneys to create value. And I think that what matters most to us and what gets us most excited is being able for future forward businesses to get the capital that they need, and for funds to make accretive investments.
Yeah.
That's right. And to add to that, what we really enjoy doing is being there for the milestones of the businesses that we work with, whether it's on the lender slash investor side or the company slash borrower side. Either way, these are all deals that matter and grow the businesses that we're working with. And for us to be able to be there for that and to structure it in a way that just is accretive for everybody adds a lot of the value for me to stay up the extra hour to make sure that everyone that we're working with is truly getting the benefit of the work that we put out into the world.
It's amazing. Love bringing mission-based individuals on here to share why they do what they do, how they're doing, and what we all learn from. So we grow together. So this is great. Great having you back. You're both back on. That being said, I don't want to assume that we've been very fortunate that the show has grown over the last year and 18 months, as you mentioned, since you've been on last. Let's start kind of from the beginning here. Let's start just with Legal Scale in general. I don't want to assume that any of our newer listeners have caught maybe the back episode. So let's start with Legal Scale. Who wants to start with that and on what you do and how you do it?
Sure. So Legal Scale is a corporate boutique. We only work with very senior attorneys across the platform that have at least 8 years of experience. We make sure that whether it's on the fund side or the credit side, as well as for M&A and for equity matters, that we're working with the right associates. All deals are leanly staffed with typically teams that include both myself, Mehak, as well as one or two other associates or counsel. And in each case, we're focused on understanding the client's goal seek, understanding their modeling and their outcomes, and then making sure that the capital is accretively deployed into those deals. And so, Mehak, if you want to speak more about your practice and everything else.
Yeah, absolutely. So like Neil mentioned, we're a corporate boutique, but what we really try to focus on are milestone financial transactions and financing transactions for our clients. So we do debt financing, private equity and equity, ECVC financings. We'll do mid-market M&A transactions, as well as fund formation and investor management. So amongst all of those groups that I just mentioned, we are able to be there both on both sides. We represent both sides on various transactions and are able to provide that level of the milestone financings that we work with. And of course, when clients come to us for these transformative transactions, then we end up working with them for everything else as well. So we'll do general corporate work as well. But our goal is really to bring that level of sophisticated knowledge from big law, but in a corporate boutique feel where our clients are getting the attention that they truly deserve.
So I see the titles, right? Managing partners. I'm curious about you two a little bit. We'll go further into the practice, but how'd this come together? How'd you two meet, and how'd you get together on this firm as managing partners?
Sure. Neil, you want to take it away? I can jump into.
Sure, I'll take it first. Mehak and I were both JD MBAs at Cornell. We were
Mm,
always very focused on the intersection of business and law. And I
mm,
think that the major thing that brought us together and why we started working together was we were both highly entrepreneurial. Mehak and I have a by entrepreneur, for entrepreneur mentality. And
mm,
so how that really helps us and guides us is people talk sometimes about attorney point scoring and everything else. When Mehak and I were at a large law firm, it was interesting to see how there would be things that the firm would care about that might be divorced from client expectations and outcomes.
mm,
What Mehak and I think do a great job at is getting baked into and understanding every deal team's goal seek when they go into a transaction. And so
mm,
that was what was most exciting for us. We understand the business and we leverage our expertise, leverage our knowledge, and leverage how we sit alongside of a deals team in order to achieve exactly the feature set that the deals team wants for each and every transaction. And that's when people come
mm.
back to us. And that's why I think we found a great niche within the market that really seems to be resonating.
Yeah.
That's right. What also helped us create this is exactly bridging that gap that was there where maybe larger law firms are either inattentive to their clients
Mm,
or may not have the right grade in terms of the actual cost for a transaction, especially if it's a smaller transaction. So
mhm,
we were able to bridge that gap and make sure that the clients, and that's the gap that we saw was
mm.
existing, so that we could create something where the clients were getting the attention that they deserved, as well as not paying nosebleed prices for sophisticated legal counsel.
Did you both know that you were going to work with each other like way back then? I'm just curious. Like, I'm just trying to take myself back in time to be in your shoes. Did you both know you'd be working with each other, or was it kind of like on the
Such a
horizon?
good question. I mean, Mehak and I worked at the same large law firm, Davis
Yeah.
Polk, which we loved being at. I think that we both Mehak's parents and my parents are entrepreneurs, which I think really
Mm.
matters. My dad is a legal entrepreneur, and my mom is also a shareholder and partner at his firm.
Mhm,
Once they grew, she came onto the platform, which was amazing. And Mehak's
mhm,
parents own a series of Montessori schools and another set of entrepreneurial ventures. I think that level and attention to detail for entrepreneurship really matters.
mm.
It also just matters because Mehak and I are deal hounds. I love to know how deals come together. It's great to know like
I
the
love that
financing and everything
term,
else.
by the way, deal hounds. Go ahead, Neil. I just had to
I
throw that
appreciate it.
out.
Yeah, feel free to use it. It's generally what I love, even if we're not on a transaction, to know how something
Yeah.
came together, how a block of shares came on. That's awesome for me. I really,
Mm,
really like that. And so I think that we feel extremely lucky. First
mhm,
and foremost, because at Davis Polk, because of the size of transactions that they were working on and how things were now more than 10 years ago,
mhm,
it seemed very hard for a firm like ours to start out. The fact that we can be where we are, the fact that we can have now almost 20 attorneys on the platform with two more starting is awesome.
mm.
And so
Congrats. That's amazing.
thank you.
That's
Thank you
amazing.
so much. It's amazing. Mehak was talking about milestones, and that's a milestone for us. And so I think that I think what we're really most focused on though is still making sure that we're directly aligned with the market. And
Mm.
while we knew that we would like to work together, to have the opportunity to do so and to have this level of idea expression is we feel lucky that we deserve is the truth of the matter. And so it's been an awesome experience so far.
That sounds like a segment or a show. Deal Hounds. Come on with Mehak and
I
Neil.
love it.
Come on.
That's
That's
it.
right.
We're gonna lean in. Have us on once a month. We'll talk to you about what we're most focused on. We'll be like a
Oh,
dog with a bone.
love this. Mehak, I want to take it back to you. Let's get into, or actually, who wants to start this first? So, Neil, I want to get into your practice a little bit more and just some updates. I mean, again, we haven't had John for over a year, and I know, Neil, and your end fund formation is growing, so we can get into that. Or Mehak, if you want to start on the deploying fund side of things, who wants to go first on this one? I need some updates on
Yeah.
what's going on in the market.
Absolutely. I think it probably makes sense for us to just quickly talk about how funds are set up, and then I'd be
Oh
happy
yeah, go
to
for it.
talk
Yeah,
about how I deploy that capital from there on.
that's a good
It
point.
sounds perfect. Yeah. So first, in terms of what we're seeing in terms of fund trends, thankfully, and for we focus on secondary funds. We do
Mhm.
ECVC funds, pure venture funds. And then we do PE funds as well as private credit funds. Each of those, thankfully, is in a pretty good spot. There's not a shortage of liquidity in the system for any of those fund types, which is great, and we feel happy. I think that for in 2022, there was probably some weakness behind venture funds, especially, and that's been reported in the past. And then we've seen an explosion recently of interest in secondaries, buying shares of SpaceX, buying shares of Anthropic or OpenAI. Like there's been a lot of interest there, and especially for AI or AI enabled businesses. Yeah. And so our funds team has been exceptionally busy on those, both in terms of setting those funds up or having additional closings behind funds, which is when a fund that's already been established raises additional capital, as well as making sure that those funds have the mandates that they need if they need to go out to investors to buy special stock. All that's been a very busy practice for us. I think that the goals of that, though, remain very much the same. First, we like to keep things simple and make sure that investors are Mehak and I always talk about, and this is from Warren Buffett, make sure that the person that likes the ballet recital isn't at the rock concert, right? There's different types of funds and market segmentation. And the key idea behind any sort of funds practice is to make sure that our disclosures and the other components of our governing and marketing documentation get the right segments of people into the right funds. And so we've been lucky to be able to achieve that for all of our investment managers.
What do you think some of the, and I know this is a broad question and it may be multiple things, but why do you think this segment is growing right now? Why there's so much interest in raising funds? Like what are some of the things or indicators that you follow?
I think the nature of the assets has grown. So, and Mehak will speak more to deployments, but private credit funds have grown because private credit assets have grown, and they've grown for a few structural reasons. But one is because of Dodd-Frank, it's harder for banks to own certain types of private debt than for us to be able to originate it. The other component of it as well is that funds and fund managers are excellent at not just creating new investments and investors, but also finding interesting portfolio assets that they can specially tailor to meet companies' needs. And so I think we're in an interesting spot where a very astute and very good investment manager might be almost making a bespoke suit, and so he might find, just exactly what the investors want to have can really resonate within the market and can result in a strategy that's working in single deals, becoming a full-fledged fund that can get 300, 500, or even $1 billion behind it. And we're happy to be a part of that growth story.
Yeah, it's interesting to me as I see that market grow. Like I'll be heading out to iConnections. They're I think I forget the exact title of it, but I know iConnections in Miami next week, and I'm looking at like the quantity of meetings, and it's something like I think they said something like 17,000 meetings confirmed. And I looked at it, and I'm like, wow, this whole market is just exploding. And I could be off, but I'm like, you go back enough years, I don't remember it being quite like this. But what you mentioned is in terms of raising capital in the way that they're deploying things, it really is kind of like that bespoke model. I feel like many people maybe want to know a little bit more about what they're investing in, and also the direct ownership they're going to have on that. Am I off on that, by the way? Like, I don't know,
that's
but
exactly
I'm just
right.
seeing it's like exploding.
First of all, I would say that for those iConnections, every meeting with Adam is time well spent. It's the highest ROI meeting you might have.
I'm doing interviews, man. These aren't meetings. I'm doing interviews. I'm doing what I do. Go ahead.
I believe it. And then, and second, like I would say that is exactly what we're seeing too. Like the number of connections, the number of meetups, is all really resonating within the market. And I think that there are new and dynamic managers that are getting traction that might have come out from larger shops. Like we work with a few managers from KKR, from Blackstone, from some other places. They were doing extremely well, but now to be able to, they have their own mandate, their own investors. They can apply their own time in a different way. And I think that trend maybe started 2022, 2023, but we're seeing the fall on from that in years 2, 3, and 4 of them starting strategies, launching larger funds, doing bigger deals.
And I think also the focus on asset class has really increased as well. So now we're looking at particular types of assets as opposed to just a general strategy of investing in whatever a company might be working on or producing. So now what we're seeing too is the breakdown between the different types of asset classes, and that's growing exponentially with certain asset classes for sure. For example, computing software and GPUs and things that may inform the future, like AI, for example. but we've been definitely seeing that interest grow and that category grow a lot recently.
Yeah. And you wouldn't have seen that before, right? This would have just been like an alternative investment, kind of like bucket in the past. Am I off on that? Now
Correct.
you see it's
No,
kind of
that's
like
exactly
now
right. It's there's
continue.
more conferences, they have more attendees, and it's more segmented than it was in the past. And I think that the
Mhm.
segmentation is honestly helpful. Just like you said, like the alts bucket can have so many people in there that when you
Yeah.
bump into somebody else, it might not have the same level of serendipity. Then we do a lot of secondaries funds work. We meet a
Mhm.
secondary fund that's launching. We have a secondary investment in mind, and so we can have that like man,
Yeah.
moment, machine matchup that's hard to
Yeah.
achieve if
I
in a
mean,
broader bucket.
previously people were buying computer chips to produce PlayStation 5s.
Yeah.
And, that has definitely changed now where it's more like computing software for
Mhm.
either mining Bitcoin or creating AI templates. It's totally changed from just playing Call of Duty on your PlayStation 5.
Good point. And what I think is interesting here too is to me it's also showing just that market mature. And what I mean by that is historically, I mean, if you go back to mutual funds, stock, all these other things, this was packaging by Main Street, right, or by Wall Street. Like this was packaging that allowed the data to be pulled so that everything was segmented and you could have just so an investor could understand it, right? Like the diversification models that were created. So now we're just seeing this as well happen in these other segments that are private, which I think is just kind of like a maturing of it. And I think it's just going to increase in complexity as in a good way, and more access to information as more funds are attracted to this area. Do you think I'm off on that, or like I'm just curious on your
Yeah,
perspective?
we entirely agree. I think we're seeing a few different points, and I think that you hit them all on the head, which is one, just greater maturity. These products have
Mhm.
really grown up. There were institutions investing in each of the asset classes that we're involved in. And I
Yeah.
would say, maybe especially pre-COVID, for an AI related business or anything else, there might have only been a VC investment or a very early stage debt investment, maybe from a
Yeah.
family office, but something that will be challenging to scale. We're seeing institutional investors lean in, understand the
Mm.
products, and grow the products because of their capacity to deploy more capital. And
Mm.
then, and further to point two, even within those niches of Heck, for example, can speak to her practice and
Mhm.
so much that we've done around digital infrastructure deals. Those deals have a very different flavor depending on where we're in. Heck has done different deals in America versus
Mm.
in Iceland and some other markets, and each of those has their own flavor and their own advantages. And so I
Yeah.
think we've been lucky to see greater segmentation from geography, investor type, duration, and so like those features of the products, we can now help
Mm.
that landscape and pick pockets in the landscape that are especially valuable.
Mm. Mehak, let's get into your side of this. Come on, gotta get you in here. So
Let's do
Neil's
it.
setting them up. Now we gotta deploy. Where's the money going? No.
That's right. And honestly, it's a great point too, is
Yeah.
you can't just raise a fund for the sake of raising a fund. When you
Yeah.
raise a fund, you have to give disclosures to your investors as to what is the capital actually going to be used for, right? So
Hmm.
this is a strategy that goes hand in hand with the fundraising itself, is what am I going to use these dollars for?
Mm.
Often, what we'll see is either if it's a private credit fund, then they'll deploy the capital into a credit facility for their portfolio companies. If it's an equity fund, same thing, but just on the equity investment side. Or
Yeah.
sometimes we work with hybrid funds as well that have both a credit and an equity piece to it. So what I like about that strategy is that we're able to not only stand up the fund
Mm.
on Neil's side, but then when we deploy it, my debt team works directly with our funds team at Legal Scale so that we can make sure that the disclosures that were provided to the investors are
Yeah.
appropriate for the type of investment that we're making.
Mm.
What we've often seen is we can provide a particular type of investment. So maybe that's a strategy that's, let's say we raised an SPV rather than a
Mhm.
broader, larger marquee fund. And that SPV is specific to a type of investment itself. I was using the example before, but
Yeah.
let's say GPU financings. And that is exactly what we're going to deploy the funds into. We create a credit facility that is in line with the disclosures that we provided to
Mm.
the investors themselves. Or we have a broader mandate where it's a larger fund and we can do different kinds of investments, but at the same time, we try to keep it in line with what was already disclosed as to the
Mhm.
use of the fund's proceeds. So we've done that a number of times, and we've been able to successfully deploy on both credit facility perspective as well
Yeah.
as equity investments, and even, let's say, secondaries where we might purchase some private stock that's not on the market on public markets, but is part of the mandate for the fund investment.
Yeah.
I have to say my favorite is probably a mix between the credit and equity, where sometimes we'll not only do a credit facility, but then also do a warrant
Mm.
that tags along. We call it like an equity sweetener with the credit facility, and then we'll simultaneously do an equity investment as well. Let's say into
Mm.
a company Series A or Series B. So that way we're on both sides of the balance sheet for the company, and that really
Mm.
helps grow the company, but also more importantly keeps interests aligned between the two parties.
What do you look for on this side of the deal, so to speak, when you're going in on behalf of the client to make sure that everything's in order? Like, what are some of the, and I know this is going to be broad because every deal is going to be different. I understand that, but like, what are some of those boxes that you're looking to make sure that like have to be checked to make sure
Yeah,
everything is operating smoothly?
it's a great question. I would say if I can use three words and all of them are going to be the same, is structure, structure, structure. Right. So just like in real estate, they say location, location, location. It's the same
Yeah.
thing. So we really need to focus on making sure that the structure actually works. So what do I mean by that? We need to align the duration of the fund along with the
Mm.
duration of the products that we're creating. So whether that's, let's say, a credit facility and you have a 5-year duration on that credit facility, when are you expecting to give your investors their return back? Those two
Mm.
things kind of need to align, and they don't need to perfectly align, but they need to align
Mm.
in a favorable way such that your investors are expecting the returns when your product itself ages out. So
Mm.
those things I look at particularly. And then also in terms of structure, it's what is the best way to provide those returns. So again, I'm going to use the credit facility as an example, but let's
Yeah.
say how much are you getting upfront in terms of your return? So whether that's OID at closing or there's any sort of discount that you might get for providing the credit facility
Mhm.
versus the back end, where is there a prepayment penalty? Is there an exit fee? And what are you going to be getting at the end? So those amounts that you're receiving are very important to structure for the returns that you would be providing to your own fund
Mm.
client as well.
Mm. Where do you find, if and it doesn't have to be on a deal that you're working on, but just in general, where do you think people go wrong when it comes to structure, or where have you seen some like deals not turn out so well because of structure? I'm curious on like where that could go off.
I think maybe speaking
Yeah,
to one point that Mehak said
right.
on the fund side
Oh,
first,
but
I think that like for us at Legal Scale, like we I think the first part of structuring is what Mehak spoke to, is just making sure that
mm,
the fund investors are on the same page as and for the duration of the assets that they're generating.
mm,
If the assets are too long dated, then they'll receive back a loan or a portion of a loan versus because the fund will end before the
mm,
loan is run off and amortized. So I think that that's
yeah,
one item that we just, in terms of structuring, making sure that we're inside of the fund documentation and
hmm,
inside of the fund's duration to make sure that there's no asset liability mismatch, just like Mehak
mm,
said. And I do think another part of what Mehak mentioned in terms of structure too is just taxation. When we think
yeah,
about structure, a lot of that is tax, tax, tax. And so we want to make sure that we know where the investors sit in order to make sure that if they're receiving ordinary income from a loan, that can
mm,
be especially good if it's a non-taxpayer in the United States, like a pension fund or
yeah,
a nonprofit. It could also be a major problem if somebody's based in Abu Dhabi, or
mm,
another jurisdiction where they're not used to paying that level of tax leakage. And so understanding where the investors sit and understanding how they're exposed to taxes are just things that we think about. And the way that things can go wrong is having the Abu Dhabi investor that's used to paying a goose egg in taxes,
yeah,
take on a 45% tax bill. And that will seem like a
mm,
lot, especially to them. And Max, sorry, take it from there.
mm,
That's exactly right.
yeah. Yeah, I see it. I see it. So let's look at we're in what, February? We're going into March. March, so I can't believe it's already going to be Q1 in the books and done. I don't know where to go. I don't know. I feel like I just said Happy New Year's. I feel like I just stopped telling people last week Happy New Year. So I'm a
I
little
know.
late
I'm
on
still
that one.
changing 2025 to 6 on everything I write. So I'm on the
So
same page.
I'm curious on both of your ends. So as we head into Q2 before we blink, what's on your minds, either on the fund formation side or obviously on the other side, the deploying side of things? Like what's on your mind as we go through into the next quarter in 2026?
I mean, I think that for us, first and foremost, we want to make sure that the products that we're focused on align with investors. And so that's
Yeah.
what we're headed to SF Vegas next week, the final week of February.
Yeah.
We're very excited for that because it's market intel for us at Legal Scale to make sure that what we're thinking of for our clients is closely aligned to what they are. Last year, and like we mentioned before, we saw a lot of digital infrastructure deals, and those had mushroomed from just being about GPU financings, buying NVIDIA chips, to now the power, the technology, the other infrastructure that makes those chips run and function. Each one of those chips, and I think this is kind of like an amazing fact, uses about 60% of the energy for an American household. They're incredible. They're huge, and they use an amazing amount of power. And Mehak is powering them by virtue of the debt facilities behind them. That really resonated with the market last year. We want to make sure that it still checks out this year. And we have a couple of deals that will come together that take this outside of America, where there's been a lot of things that are focused here, to other markets, like I said, Iceland before, and then we're actually working with another company based in the EU. So making sure we have product market fit for the countries and geographies that our products resonate is a key thing for us, and each year has its own flavor. And it's really something that's front of mind for us.
And I would say something that we do very well at Legal Scale is we are able to tailor any facility to the actual asset class itself. So we're at the forefront of creating new products that maybe, 4 years ago, if you asked me about GPU financing, I could probably count on half of a hand of how many deals I've heard of that existed, and now it's really exploded, right? And that's the same thing with a lot of things. I mean, recently we've been hearing about and have done a ton of litigation finance transactions that have really exploded as well. So it's really, like Neil said, about what is interesting to investors at the current time and what is exploding at the current time. And what we try to do at Legal Scale is to be ahead of that curve and to make sure that we are there creating creative solutions for the types of financing, the structure that we need in order to ensure that our clients are protected, whether they're company side or investor side, and we create something that can withstand the test of time, since these documents live for a long time.
Fantastic. Well, it's been great having you both on for this, we call it reunion episode. No, for our Global Leaders series. It really has been a pleasure catching up, and thank you for the updates. How do people follow up? How do they learn more if they want to connect on Legal Scale?
Yeah, absolutely. So they can reach out to either one of us directly, Mehak, Mehak at legalscale.com, or Neil, Neil at legalscale.com. We certainly have a fantastic LinkedIn presence as well as our own website. But what we really want is to hear directly from you. So what we do really well at Legal Scale is we get into transactions at the earliest that we possibly can. We try to help structure things. We get in before the term sheet is signed, and we ensure that we're providing that advice early on. And so what Neil and I do, I think more than half of my day is spent just doing phone calls with prospective clients to give them advice for nothing else other than, a bagel tomorrow morning. So it's always great to be able to not only see what's in the market, but to grow the ecosystem together.
That's right. I think Mehak hit the nail on the head. Like our goal here is to get into transactions early and help them come together. Even if you don't need legal counsel, but you'd like a contact to a client that we're working with or another deal team member. There was a recent geothermal transaction that we connected 2 clients on, even though we didn't have the opportunity to do it ourselves. And the benefit for me is that I have a 3.5-year-old at home, and to know that there is a potential where that transaction leads to something and can create renewable power. It's an ecosystem for us, and we know that will create more and more thereon. So both Mehak and I are Johnny Appleseed for business development. We just want to see this ecosystem grow.
Man, Deal Hounds, the Johnny Appleseed. Come on, Neil. You're just throwing them out there today. This is awesome. For everybody listening, just so you know, we'll definitely put the links in the show notes so you can, and the info so you can connect with Mehak and Neil and follow up. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Yes, you heard me correct. Daily. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow button. And Mehak, Neil, great having you back on. Appreciate it.
Happy to be back. Thank you so much.